Hello everyone and welcome back to our channel. Today, we have an eye-opening episode for you as we uncover the notorious ENron scandal, one of the biggest corporate frauds in history. Join us as we unravel the intricacies of this elaborate scheme and shed light on the consequences it had on the business world. The rise of ENron. ENron was founded in 1985 by Kenneth Lay, who had a vision to create a leading natural gas company. At the time, the company primarily focused on the transmission and distribution of natural gas. However, it was under the leadership of Jeffrey Skilling, who joined ENron in 1990, that the company underwent a significant shift in strategy. Skilling believed that ENron's true potential lay in becoming an energy trading company, capitalizing on market deregulation and the increasing complexity of the energy industry. Skilling's innovative ideas and aggressive approach transformed ENron's culture and practices. He implemented a performance-based compensation system and encouraged employees to take risks and think outside the box. The creative accounting techniques. ENron established an SPE called the Raptors. The Raptors were used to hold underperforming assets that were causing losses for ENron. In exchange for these assets, the Raptors issued ENron stock as payment, allowing ENron to remove the losses from its financial statements and present a more favorable financial picture to investors. Another example is the Chuco partnership. ENron created Chuco as an SPE to hold its investment in a company called Jedi. By doing so, ENron kept the debt associated with the Jedi investment off its books, making its financial position appear stronger than it actually was. The Osprey partnership was another SPE created by ENron. Osprey was used to purchase ENron's assets at inflated prices. By recording the gain from these transactions, ENron was able to artificially boost its earnings and present a more positive financial performance to investors. These examples illustrate how ENron used SPEs to manipulate its financial statements, hide debt and losses, and create a false impression of financial health. These deceptive practices were key elements in ENron's fraudulent accounting techniques. The fallout and lessons learned. The collapse of ENron sent shockwaves throughout the business world and had far-reaching consequences. Let's explore the aftermath of the scandal and the lessons learned. ENron's bankruptcy had a devastating impact on various stakeholders. Thousands of employees lost their jobs and retirement savings, as ENron's stock became worthless. Investors suffered significant financial losses, and the energy market faced increased scrutiny and regulation due to ENron's manipulation and abuse of power. Following the scandal, investigations were launched, leading to legal proceedings and convictions of key executives involved in ENron's fraudulent activities. Former CEO Jeffrey Skilling and former Chairman Kenneth Lay were among those convicted of fraud, conspiracy, and other charges. The creation of the Public Company Accounting Oversight Board was another important outcome of the ENron scandal. The PKOB oversees the auditing profession and sets auditing standards to ensure independence, objectivity, and transparency. Additionally, the ENron scandal prompted increased scrutiny and awareness of corporate ethics and the need for transparency in financial reporting. Companies and regulators became more vigilant in detecting and preventing fraudulent accounting practices. The importance of ethical leadership, strong internal controls, and independent auditing came to the forefront of corporate governance discussions. The legacy of ENron. Although ENron's legacy is one of fraud and deception, it also serves as a cautionary tale for investors, regulators, and corporations. Let's reflect on the lasting impact of the ENron scandal. The ENron scandal shattered public trust in corporations and highlighted the need for transparency and ethical practices. Investors and the general public became more skeptical and demanded greater accountability from companies. The importance of accurate financial reporting, independent auditing, and strong corporate governance became paramount in rebuilding trust. Whistleblower protection played a crucial role in exposing the ENron fraud. Sharon Watkins, an ENron employee, blew the whistle on the accounting irregularities she observed within the company. Her courage and willingness to speak out against wrongdoing helped uncover the extent of ENron's fraudulent practices. This highlighted the importance of whistleblower protection laws and the need to encourage individuals to come forward with information about corporate misconduct. It is crucial for viewers to stay vigilant and informed about corporate practices to prevent future frauds. Understanding financial statements, asking critical questions, and conducting due diligence when investing in companies are essential practices. Additionally, supporting and advocating for strong regulatory frameworks, such as the Sarbanes-Oxley Act, and whistleblower protection laws can help prevent and expose fraudulent activities. Lastly, the ENron scandal serves as a reminder that ethical behavior and corporate culture are fundamental to the long-term success and sustainability of any organization. Companies must prioritize integrity, transparency, and accountability in their operations to regain and maintain the trust of stakeholders. In conclusion, The ENron scandal exposed the devastating consequences of corporate fraud and deception. It led to significant changes in regulations and reforms, such as the Sarbanes-Oxley Act, to enhance transparency and accountability. ENron's legacy serves as a reminder of the importance of ethical practices, whistleblower protection, and staying informed about corporate activities to prevent future frauds. Trust and integrity are crucial for the long-term success of organizations. If you liked video, please press like button and subscribe.